Hello everyone, welcome back to our YouTube channel, the Hedgers Academy. My name is Jazzy and you are watching today's weekly BTC update, SPX and dollar index. Okay, let's get back to the chart. And today, the BTC trade setup. Now you can see we have a clear market structure, higher lows right now. A bit of typical for traders, intermediate trader, but professional traders is seeing this as a bullish price structure right now. And you can see we have an accumulation here that we discussed in the previous video. Also, I have shared it in my Discord channel. You can see, yeah, here you can see the accumulation, manipulation, and expansion. I'll give you more precise one. The This one is the oldest, yeah. Accumulation, manipulation, expansion, power of three price structure, okay? And that is the 30-minute wick. The 50-minute of the wick has been taken out on this manipulation price action. You see, I'll give you an example also on the chart. The uptrend starts from the weekly VWAP towards the buy side liquidity. Also, I have told my member that BTC having power of three structure. At the moment, right now, prices in discount zone can get anytime sooner into the expansion on monthly closed days. Okay, you need to maintain your risk management, money management to play this setup. That was a neat and clean setup that I gave to my Discord members and audience. And also, I give them the confirmation, the well-informed decision of the bullish CVD divergence. You can see the weekly VWAP holding the price, and we saw the expansion to the upside. Expansion to the upside. Now let's get back to the new trade setup. This is the buy side liquidity that has been taken out on this golden ratio pocket towards along with the buy side liquidity, and this 30-minute demand zone, you see, that was I'm talking about, that's been taken out exactly to the dollar. And also previously I shared in the previous YouTube video the exact same 30 minutes demand zone setup exactly to the dollar. That was a good long trade that I shared with my audience for free. And also I told them the similar setup to this demand zone that has been taken out to the low side of the wick. This one. The 30-minute demand zone is acting as a good support zone here. I'm also now looking at this trade setup, having stopping out most of the early long traders on each wick to the downside. You see stop out, stop out, stop out. So you need to play it really with a good stop loss, wide stop loss. If you play with a tight stop loss, you're not gonna make it, because it's really a tricky trade setup in the range. That's why it's kind of a ping pong chop. And we see single print has been taken out on this pre-market dump, and to the upside single print, that is my prior area of interest right now, 27,500. From this single print to the upside, that the reaction from this single print has been really nice, as you can see. The pre-market dump, and then we see in the New York session that has been respected very well to the exact dollar, the single print, and also the IDR very nicely as a support. All of the candles has been closing above the IDR, definite in defined range, and we can see some good move to the upside soon in this New York session. The anticipated price action should be to the above single print. Also, we have a liquidity heat map that we shared with our members previously. You can see here 27,500 is the level of interest on BitMEX, Binance, Bybit. All of the aggregated, you see 250 millions of liquidity ratio is coming on this pivot 27,500 that has been having good confluences from my technical analysis that all of the liquidity to the downside has been taken out already, and now we are looking for the upside liquidity to be taken out towards 27,500, maybe more upside, but 500, maybe more upside, but this is the key zone right now, full of liquidity. We can have a good reaction here, and that could be a quick reaction. I mean, like suddenly pump and then suddenly dump. So be careful with that. You need to play a limit order for it to take profit. Also here, there's a good confluence. You can see on this spike of this gray color, you see this gray color is the 100x leverage short sellers liquidity. The 100x leverage over leverage plebs are sitting over there. Now you can see here, I'll show you here. You can see short 100x, that is indicated as the gray color, and in the gray color wick you can see 100x short sellers are liquidity sitting over there. They need to taken out on 27.5k. So in my opinion, they are going to show they are going to take out soon, and that will be a good confluence for our trade setup. You can see our PNLs. We are in our long right now from 26,800. My entry is not so good, but my members' entry are better than mine. Yeah. Let's find some confluences. Now, yeah, in this kill zone, time, you can see the dump has been come exactly into the kill zone of the pre-market, and that is indicated as a entry point for the New York boys to ride this long setup. So all this is kind of the algorithm, and it always 80% of the time works. And now you can see we can get some good long trade setup because of this wick that has been bowed back really quickly on this pre-market dump. Until and unless we are above it, we are good. Key levels, you can see the key levels. Previously I marked them on the single print here. That has been acting as a good support so far, and however we break this, but still we are above, price above it. That is a key, the sign of strength. And also my key level 26050, that has been the 50% of this wick, has been respected exactly to the dollar. That is a sign of strength. And the ultimate area is 225,211. That is a sign of strength. And the ultimate area is 225,211. That is the key level and weekly pivot as well. So that's what I'm looking for right now. After, if we break below the above key levels, right now I'm anticipating something like this. If we go back to this and didn't got any sign of strength, then it's going to more downside in terms of panic selling. Naked point of controls and high time frame levels. So you can see the weekly NPOC and the daily level is being aligned with the key level area that is I told you just now. You can see here that is the level of interest, and what I'm expecting is something like this, making a higher making a lower high like towards 27.8 something, and then come back and then sweep back up. So this is the high liquidity area, 25,200 and 24,800. You can see in the heat map as well, in the 3-month heat map, you can see there's a lot of liquidity in this area that can act as a good support and refueling for the bulls. You can mark these levels in your charts. This is really a key zone for bulls that need to be protected. Okay, so right now, sorry, right now we are in the previous weekly POC. I mean, like above the previous weekly POC. That is a good sign of strength. Until and unless we are above this previous weekly POC, we are good. And if price break this key level, previous weekly POC, then there is chances that we are going back to the previous weekly value area low, or maybe to this previous weekly low. So basically, the previous weekly POC is really a key zone for us. Bulls need to protect it and need to stay above it. If we go below, then they're going to be a three bottom. I mean, above it. If we go below, then they're going to be a three bottom. I mean, like three bottom structure. And if we are protected, then we are good to go to the upside. Also, this previous weekly equilibrium and the previous weekly value area high need to flip into support to go back up towards our target. And this is the intermediate resistance right now. PDPOC, PD value area low. We are above it. This is a sign of strength right now. And the previous monthly, PDPOC above it, single print above it, previous weekly POC above it. So we are good to go. And need to reclaim the previous daily value area high that has been rejecting so far. The previous weekly value area high is also rejecting so far. We need to reclaim them to get bullish to be achieved on this long trade setup. Okay, let's delete this. We are in the intraday setup, like previous daily. We are in the previous daily levels right now, and it's a good day trade setup. If you know what I mean, the day traders know what I'm talking about. You see the risk reward is really good, 1% risk only, and 2.6% gains on this trade setup for this day trade. So all the day traders know what I'm talking about. And a great, good, long, reasonable right now. As you can see, previous monthly value area low has been taken out exactly to the dollar. Our levels, our horizontal levels are respected exactly to the dollar, which means this is a sign of whenever the price is giving good reactions and sign of strength from the horizontal levels, like value area low and value area high and POC, it means a sign of strength. The technical analysis is respecting, and you can anticipate a good move to the upside, exactly what your target is as per the market structure. So right now we are above the PM POC, we are above the single print, we are above the PD POC, and we are above the weekly POC as well. So right now I think this is the target for to the single print that has been having a resistance as well there previously. You see previous monthly value area high also been respected exactly to the dollar on this previous expansion, and so our levels are really key levels, and all of them are respected exactly to the levels, good for take profit and also good for entry levels. You can see the Monday low is also aligned with the single print area. That is my target area of interest. So I think that's gonna be touch anyway, along with the 0.75 Fibonacci, also Monday low. So all of these are having good confluences here, along with above the PD high. So I'm going to go with this target. Now let's get back to the session trade that I just planned right now. You can see here from the 30 minutes order block to the 30 minutes order block, we have a BPR as well, balanced price range side imbalances that's remained untapped due to the aggressive movement and the of the price action the vector candles go through it and remain the imbalance, their inefficiency. So we need to, it's also act as a magnet. It's bound to fail sooner or later, but nobody can say that it's gonna fail today, tomorrow, or day after tomorrow, or a month. But it's inevitable. It's imminent to get failed sooner or later. So I'm targeting BPR along with my price action zone, the area of interest, along with the 30 minutes order block there as well. So 30 minutes to 30 minutes order block, the demand zone makes sense for me, because we are having a really fine reaction from this current 30 minutes order block that you can see right now. Um, to the buy side liquidity as well, PD high and the buy side liquidity. So I think this makes sense to get a good bounce in within the New York session. So the also the order flows are not so bearish right now, and we can see a good reaction with the having a good, you see on the to the dollar, the 30 minutes order block above the PDPOC and the single prints. So this is called a sign of strength. When you see such price action, that is called experience also. I'm not going a wishful thinking, but this is kind of an experience that after such reaction, it means that limits orders are filling and the sellers are getting absorbed on these levels. So with a good risk reward ratio, it's a pretty nice balanced trade for me. The gains are good. The losing money, the invalidation is pretty quick, so we don't have to we don't going to lose much on this trade if our invalidation levels hit within the session. Okay, I'm trading the New York session right now as per my strategy. This is a good range here, been respected pretty well most of the time. So I think this is make more sense. As per the support and resistance between the Fibonacci levels, I think this one is more accurate because of the range bound scenario. We got a deviation both side of this range, as you can see here as well, and sorry, my mistake. To the upside. Sorry, my mistake. To the upside. Yeah, the both side is the deviation of this range, and in the last of the video, I'll give you also an example how to trade this range as well. And this golden ratio, I don't think so is gonna retest again, because we already front run it above the PDPOC and the order block, so I'm removing it right now, and I don't think so it's gonna retest again in this session, because 1 hour of the session has already been paused and it has not been retested within. It's been protected so far. higher term time frame levels are really far away from the range. So this is pretty range bound price action at the moment. And let's I think I have covered most of the things already. Let's talk about the SPX. SPX is pretty bullish right now. It's getting, breaking out of the range high. So that is a sign of a strength for me. And whenever these type of things happens in SPX and stocks in traditional market, crypto used to follow it. So I think if SPX is bullish and breaking out, BTC gonna follow it. Maybe after the session ends, after New York closing, within New York closing, or maybe tomorrow in the weekends. But it's imminent that it's gonna follow out, and that is my USD US against Canadian dollar a long trade setup I'm looking for. If dollar index is pretty bullish, then we can have a good trade on USD and Canadian dollar. You can see here, dollar index is pretty bullish and respected my equal highs market structure shift that I drew yesterday. We can see we rejected from the fair value gap, daily fair value gap here, and after that we see a good support at to the dollar, exact to the dollar, to the equal highs of the previous market structure. So let's see, the daily level is here, that is in front run, not not fully tapped, and be on, should be named as daily level as well. Okay, so you can see if we get a good bounce, we can easily go towards these two targets that I mentioned, 104 and 105 in dollar index. And dollar index is pretty bullish right now. I don't see any weakness, sign of weakness at the moment. People are saying that it's weak, but I don't see any weakness on dollar index right now. It's pretty making higher highs and higher lows, and from the bottom to the upside, you can see already. And that is just rejected from the daily fair value gap, as in terms of profit taking and into the other forex pairs. So far it's a good uptrend, making good higher highs, higher lows. So I don't think so it's having any sign of weakness right now. It just retraced to the having any sign of weakness right now. It just retraced to the support zone, and now heading back to the upside. Until and unless we see some resistance at the fair value gap on daily, that's been marked in red box. So far we are good with our price action, and maybe after this video uploading, you can get we can get our target done. But let's see. Yeah, I'm not ultra bullish. You can see, let me show you. We can still make a lower high, and still the price action on the micro time frame could be bearish as well. We can retest the resistance zone and then head back down. So I'm just day trading this long trade setup within the range bound scenario. I'm not ultra bullish at the moment because we don't have that much sign of strength. Okay, so as per the dollar index, if it rebounds again, then the BTC USD is going to be bearish. Okay, that makes sense. Asia high has already been taken out, you can see, and we have an Asia low that has been remain untapped. But if we go to Asia low and tap it, that's gonna be bearish. So I'm expecting more upside, and then we are going to take the Asia low. Let's go to check the footprints and the order flows for Bitcoin to see if we are bearish or bullish. Are doing at the moment. The net longs are still coming on Binance futures. Let's see on the Bybit. Bybit having good longs net longs coming in along with the open interest. Yeah. Also, check net shorts are also increasing on this. This is pretty neutral. We need to see which side is going to be taken out either way. Also, the volume is shrinking. This is not the consistent volume for bulls. The volume should be consistent and good above like 10 million, 20 million to support the price action, but it's not that much bearish, but pretty neutral. It means like a big move is going to come either way, upside or downside. In the upcoming few minutes and hours, we're gonna see some good volatile moves. Hey, this is the prime scenario right now for the whales to manipulate the price action. They're gonna inject their money to pump the price or dump the price. So this is the prime time when the volume is shrinking. That is the prime time for whales to step in and manipulate the price to either way of their interest. They follow the liquidity basically. If the liquidity is good to the upside, then they're gonna follow it, and vice versa. We don't have any bearish or bullish diversion, so it's pretty neutral. And let's talk about the last scenario that I was uh, talking about. You can see we have a range here. That is our range, and we deviated below this range, and we deviated below this range and above this range as well. You can see this is the deviation of this range, failed breakouts you can say, and the price is still within the range. If I pull the range tool, you can see the value area high and low. We are under this value area low and above this POC, volume POC, and the midline of this channel, range channel. The midline of the range channel and the POC is respecting, and above it we have a value area high that has been already been taken out and tapped. So this indicating me that we are still in the range bound scenario. Let's mark the levels. Value area low, value area high, and the POC. Respected exactly to the dollars. And also, we are in the chop price action range right now. So if you are a good trader, you need to understand that if you are placing the stop loss really tightly, then you are not going to make it. You are not going to win this trade if you are too afraid of losing money. Because if you are a good trader, you are not going to place stop loss too tight in this range in sideways. You need to put your stop loss above the range high or below the range high of this range. Because if you are afraid and putting stop loss too tight, it means that you are gambling. You are over leveraged probably, or you are high in position size. That's why you are afraid of losing money, because of the volatile move in the market. If you are following risk management, if you are following good money in the volatile price action, because the loss is minimized in the position sizing and leverage taking. Okay, if you are following management properly. But if you are not, then I know why you are getting stopped out continuously on this trade, because you are following risk management and money management really badly. You are not trading, you are gambling. That's why you are getting stopped out, and price is moving back up, stopping you, backing up, stopping you, backing up. So that's why you need to place your stop loss. You see, we are in the range. We're gonna short the range high, long the range low. So yeah, that's it. If you want to play 1%, 2% move of this range, you need to put your stop loss in the out of the range. Okay, so to protect yourself from getting stopped out, and you can DCA, left some room for the DCA, and also trade the range until it breaks out. Either way, okay, the upside or downside. That's it. I'll see you in the next video. Take care. Bye bye.